Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, April 30th, 2024. Let's jump into the charts. Where to begin? I'm going to backtrack just a little bit and remind you what's played out over the last week or so. Back here in later April, near the lows, we had closed once again below a long-term channel bottom that indicated a bearish continuation over the following 2 to 3 months back to that 101.81 January 23 low. It wasn't to be. This is Wednesday of last week where we gapped back above, 160.51. This is off an earnings number. Also, the channel structures at that time were in the upper 150 still. I still like 157.51. It's lower right here, 160.51, 157.51. And when that occurred last Wednesday, the Wednesday settlement, we were anticipating the 176.59 descending channel top, which we didn't even approach really last week, but we leapfrogged right above it on Monday following, the announcement that the Tesla has received Chinese approval for advanced auto-driven technology. So bullish for the car maker. We gapped above 176.59. I'm going to assume that we're going to close this week, Friday, above 176.59, which is on the weekly chart at 177.04. If I could zoom in this area here, as I've been saying, it is a settlement for the week itself above 177.04 that indicates the 228.35 channel top as a 2 to 3 month objective. The way things are going now, it could be within 2 to 3 weeks. This is a daily chart of the same structures, but slightly different numbers. That 177.04 channel top I just showed you that we leapfrogged above is at 176.59 on the daily chart. If given the opportunity, this is a solid area to buy into in anticipation of 228.57. I have to stop saying 2 to 3 months because the way this rally is playing out, this could be within 3 to 5 days. If you go all the way back to last week, about 3 to 5 days ago, when we were in, the upper 130. So this could be much sooner than 2 to 3 months. It could be 2 to 3 weeks. It could be 3 to 5 days. 207.74 will have something to say about it. This is an intermediate descending channel structure that can contain weekly buying pressures. And inside of this 176.59, or in other words, 177.04 on the weekly chart, we've got 184.25 to the downside, and we have 200.11 to the upside. 200.11 is actually a 3/8 upside Fibonacci from the July 23 high against that more recent April low. And that can contain intraday buying pressures. With present volatility, I'm reluctant to call it a session containment level, but for you aggressive day traders, you can have at it in terms of a short sale. I'd rather you take profits here. By the way, you may have been long already coming into through the weekend as we were anticipating a testing of this 176.59 channel top from last Wednesday on. And we leapfrogged above it. I hope you held long positions over the weekend. And now we're looking even better because the overall outlook has shifted into a more aggressive upward dynamic. Once again, anticipating 228.57. Normally, this would be a 2 to 3 month objective. But right now, once again, it could be within 3 to 5 days if we happen to close today above 207.74. So if we push or open today above 200.11, and I'm going to assume that because the market eased back away from the highs on Monday, that we're going to have a more two-sided approach as we move into later week. 200.11 may be upgraded over the next few days to a session containment level. But for right now, I just want to give the market room to move, to breathe. And if we push or open today above 200.11, 207.74 is likely, where we could place a weekly high and fall away from here, perhaps back to the 176.59 channel top. So this is a pretty solid 3 to 5 day, 1 to 2 week swing trade. Now, overall, we're anticipating 228.57. So, I'd rather have you bottom pick 176.59 or a buy above 207.74 rather than, if you want to short sell the market 207.74, be my guest, because I think that is a valid approach. Sometimes when the markets look the strongest, as it does right now, that is the very thing to do, because it is the most reluctant activity that you'll find, generally speaking, in the marketplace. So if you want to stick your neck out and sell 207.74, I don't think it's a bad approach. I just would rather you buy a settlement above it because I think that is an eventuality. But we could, as I say, spend the next week or two falling back to 176.59 after having tested 207.74. Closing above 207.74 is an ultimate expectation, and with that, probably 3 to 5 days to 228.57, where we could top out through May trade and even into the third quarter. This is a big area. I'm going to give you a kind of a snapshot of the big picture, though. If we were to close, because given the present volatility, that view is warranted. A settlement above the 228.35, this is the weekly chart, channel top, would signal 2 to 3 to 5 months bullish continuation to 321.59. You also have the 299.29 July 23 high to reckon with on the way up. But I think that this is a pretty valid outlook. In the event we close above 228.35, we have a 2 to 3 to 5 month rally to 321.59. Until then, this is an area where we could top out through May and even into the third quarter and fall away again from there. And it is considered, I'm going to say, a 2 to 3 month target above 177.04. But as I've just said many times already in this video, it could happen within 3 to 5 days. Certainly a settlement today above 207.74 would indicate as much. So trading this area in here, I want to sort of finesse this a little bit. We do have 184.25 to the downside, and that is this previous high going back to late March. That also pretty much held the lows on Monday. 184.54 was the low. So I do like 184.25 as a downward pivot point to 176.59. And I do like to the upside 200.11 as an upward pivot point to the 207.74 area. 176.59 all day long is your aggressive pullback support. A 1 to 2 week rally to 207.74 and a 2 to 3 month. I should just stop saying that because I really think it's going to be more like a 2 to 3 week rally to the 228.57 channel top. I think that is the likelier outcome. If we get a downward retracement to 176.59, it is a solid buy opportunity through the rest of the week and through the rest of the month, expecting 228.57. I think I've given you the important point on the way up at 207.74. Can contain daily, possibly weekly buying pressures. This is a solid day trade and 3 to 5 day swing trade back to 176.59. But just know I am expecting 228.57. Closing above 207.74 presents a valid 3 to 5 day swing trade to the upside. It would probably take 2 to 3 at the most. 228.57, then an area to take profits, longer term, short term, and to set a short position that could play out all the way back into the mid 170s and dropping over the following month or two of activity. And once again, if we close above 228.35, 3 to 5 month rally to 321.59. Let's take a look at the downside. If we close back below 176.59, I would expect this 157.51 to 160.51 area within 3 to 5 days at the most. And we could see the market fall all the way back roughly to 138.35, which is this long-term trend line that goes back to March of 2020 that we tagged last week, early last week, came off of it nicely. And so this will regain a weekly support status. But let me just leave you with this. If we close below 176.59 today, over the next week or two, we can unravel all the way back into the upper 130s again. Until then, all systems go to the upside above 176.59 or 177.04 weekly chart. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Wednesday's Tesla. You have a great day.